Hey traders, Akil here on a very rainy Tuesday morning with this week's live room review. Just briefly going to recap some of the stuff we took in the room today. It was a very busy yet boring type of morning. We were able to identify a few trade setups in the beginning of the session right off the bat. Those ended up failing on us, but we did get involved in a few within the last hour of class. Here's one I'm going to talk about right now. We'll talk about Aussie dollar. Here's a simple one. Price action just came down into our DSR zone. Again, remember our dynamic support and resistance zone. Put in a double bottom with RSI divergence. Easy trade. Buy them up. Risk reward is crazy. See, short stops. Looking for target ones probably up in this 786 area, giving us about 2 to 1 to there, and then second targets looking for extending up to here, looking at 1, 2, 3, about a 4 to 1 risk reward ratio. So you got to take these all the time. And again, when we see our minor and major DSR levels, so our structure levels overlap, it's always a pretty good sign. Add to that an entry technique as far as double bottom RSI divergence gives us even more reason to get involved in the trade. Now we also took one on here on Euro dollar, which is up 4 right now, and I'll explain and delete this a little bit, get into a little bit about my mindset for this trade. Now originally was looking to short the market right here, had a DSR level, we're waiting for the market to come up here, maybe double bot or double top, give us some divergence, and we shot right through. What I noticed was basically the overall direction of the trend. And if I bring in we'll just zigzag it up. If we start with our low right here, we have a higher high, higher low. We then come with the retest this structure, give us another higher high, higher low. Break above structure, giving us a higher high, still a higher low. You see the trend continuing. Higher high, higher low. Slightly higher high, not really close, you don't have to count this, but higher high here. If you break above, again, some previous resistance, giving us a higher low. So as soon as we made this break, even though we have structure, even though we have previous structure up in this area, when we made this break, this told me that, hey, this market wants to go higher. Now what we did was we retraced, and actually a little further than I expected, but it still presented a good buying opportunity. Here's what I did. Just made a little Fibonacci matrix as I zoom this in all the way for you to see. We took our last move. So our last move here, high to low, or low to high. Brought in a Fibonacci retracement. Looked at our 786 here. Now this is all when the market was doing this. Came down to here, actually right here at the time. Brought in a Fibonacci extension from swing high to swing low. Back up. So we had a 1618 right here, and if I bring in my minor Fibonacci point, we'll have a 1414 lining up as well, right with our 786. Lastly, brought in the ABCD pattern, or drew in an ABCD pattern, copy and pasted that, and said that, hey, we have a nice little kill zone box between 129.25 and 129.22 between the ABCD pattern, the 1414 extension, the 1618 extension, and the 786 retracement. You could even bring an 886, which is going to be a little lower. Market came down here, and we bought them up aggressively. Now we're involved about 8 pips up, looking for the market to come up, retest this structure level for target ones. If we get a break and close above this level, I'll roll stops up even more, protecting myself against loss. So if this market comes back, instead of taking a 15 pip loss, only taking a 2 or 3 pip loss, and you guys have been following me for a while, you'll know that risk reward is a key to me in my trading style. So we'll see what this does, and we'll see what tomorrow holds for us. Hey guys, back again. It's was it Wednesday? last day of my old office. I want to share something that I read this morning on our Ratio Room Facebook group page. And first of all, if you're not a member, then shame on you. You should be very disappointed in yourself, because this is quite possibly the best trading group in the world. Not a trading forum, although it acts of such, people sharing charts and ideas, but it's you just got to experience to see what I mean. But there was a nice post by one of our live room members, Lax, today. He said the importance of consistency. And I think we talked about this last week, but he said, hey traders, this week and last week we've been talking a lot about the importance of being consistent in the live room with Akil. Those of you who don't know me, I'm a full-time professional trader. About 3 weeks ago, I went through an extremely unusual losing streak, about 11. I don't get more than 5 in a row, so to get 11, well, let me tell you, that's uncharted waters for me. In times like these, your psychological resolve really gets tested. In my early days of trading, before I did Jason's Pro Trader course, I would have thrown my computer out the window. And when something like this happens, throw my computer out the window. When something like this happens, you have to ask yourself one simple question: did I follow my rules? If the answer is yes, then you must carry on taking the next trade every single time. And guess what? My next trade was a winner, which wiped out 2 of my losses, and the next one was a winner, which wiped out 3 of my losses. A few days later, I had wiped out all of my losses and ended the month profitably. When you are trading alone, it's so easy to get into a rut when you have a huge losing streak. Next time you're going through a similar situation, just ask yourself one simple question: did I follow my rules? If the answer is yes, then pat yourself on the back and take the next trade. I cannot emphasize the importance of being consistent. Remember, trading is a journey of self-discovery, not a sprint. Beautifully said. And that kind of set the tone for today's live room session. First of all, I started going over one of my better war stories of losing almost $30,000 of a client's money in a week and missing an opportunity to gain $60,000 back. And well, I think I've told you guys before. If not, I'm sure you'll hear it in the future, as that's the story that usually gets people's attention. But sticking to the theme of patience, that's how we were today on today's Euro Yen trade. Let's see how much we're up real quick. 22. It was a very patient trade because we actually waited a few times to get involved. Now I'm on my DSR charts on the range bars, and early this morning, I was actually looking to short this market around this level. I thought the market would retest up to here. You can see we have structure going back. So I told myself, hey, if the market gets here, holds at this DSR level, market was overbought, I'm going to go ahead and short this. However, I wasn't going to do it aggressively. I was going to be conservative or patient. What happened? The market blew right through, creating a higher high, which in my mind, again, makes this a new trend. And we're looking at now our low, followed by a retest of our highs, followed by a higher low, and with this recent break, we have a higher high. And you can see the new direction of the trend for me. So what do I think next? How can I get involved in this trend towards the upside? I'm expecting another higher low to form. So we zoomed in, we waited for the market to retest this DSR level, or our structure level. And I said, hey, once we retest this level, I'm going to buy this up. But instead of just entering in a limit order again, I'm going to wait for a break above, close above entry. So as we followed it candle by candle, came down into our level. This is where we looked at it, a beautiful bar here. Said, hey, we get a break above and close above this bar, I'm getting involved. However, we never got that. Never got that as we keep going down. Never got that until about this level right here. Is that where we got in? Yep. Until about this bar right here, we finally got the break above, close above, entered the trade, put protective stops underneath previous structure, and got long. The trade put us through a little bit of pain, which is okay. That's normal. We're used to it. But as you can see, came back up, retested these highs as a trend continuation trade, rode it out, came up, hit target ones up here, and I just got missed on getting stopped out for trail stops as I moved my second position, or my stops, to break even. Now we're looking for Second target's up at 101.50. Could actually be longer based on our 15-minute time frame, but when doing some more analysis in the room, zooming out, we also have a cipher pattern completion at the same level. So instead of shooting for the next place where the market is likely to turn around, which is 102, almost another 100 pips away from our entry, it's a lot safer just to get out at our cipher pattern completion, put some money in the bank, and not get too greedy. Live to fight another day, maybe even stop and reverse at this cipher pattern completion. Okay, so Thursday was another good day, or hopefully another good day. We haven't got filled on any of our positions yet, but we're looking really good in euro dollar, about 33 pips up right now. Got about 15 to go before target 1, and again, a similar trade to what I talked to you about the other day, just a structure based trade. You can look at it either off the 5-minute or the range bar charts, but and this is actually 60 minutes, go down to the 5. We basically just waited for a retest of structure. We had a structural level drawn out. We had a couple spikes here. We had the market, actually it's easier to see on a range bar chart. But we just waited for the market to come down into a structure level. Came down here. We had stops below, bought them up. No fibs, anything like that. What I did want to talk about for euro dollar was what happened with yesterday's trade. And if you guys remember yesterday, we took an aggressive C. I'm going to go to the 15-minute and kind of hide these stats. But we took an aggressive C on a bat pattern, which actually paid off very well, if I can find this thing. There we go. We predicted a bat pattern being here. X to A to B, B to C, C to D completing somewhere around here. What we did in the live room, we got an entry signal at our C point, took an aggressive C trade, traded it up, took target 1s off at our B leg, took target 2s off at our bat pattern completion. Now I was actually asleep when the bat pattern completed, but what you could have done, and what we often do as traders, if this were say on a higher time frame, I would have done this as well, but simply put a stop and reverse at the bat pattern completion and trade it right back down. Very similar to if we look at where are we at? If we look at pound dollar on the daily chart, on the 240 chart, and this is something we called we looked at back in during our Kansas City live event. Let's take the zigzag off of here. Remove live event. We predicted a bat pattern all the way up here, which you see has formed and is probably back around break even. But if you guys remember, and syndicate members, we talked about this, and again we did the live event too, playing this structure trade up. Market broke, closed above structure, came back to retest. Could have traded this all the way up to the bat pattern completion. Did a stop and reverse. Would have took a little bit of pain at first, but again, be right back down to break even. So it's always good. Prediction is key. Even with the trade that we're lining up with right now. I'm not going to get into this, but we talked about this the other day too, a potential short opportunity with, well, nothing in its way from going down maybe 500, 600 pips, but that's a story for another time. All right, traders, thank you for joining me for this week's Triple Threat Trading live room review. Another positive week, some really good discussion this week. It's going to get even more intense next week as we have traders from the Ratio Master Series coming in to join us. So I'm not sure how many that's going to be, but I'm expecting a few hundred. So the room should get pretty rowdy, which is good. It's good for a change of pace. We have about 40, 50 people in the room every day right now, and we've gotten to know each other pretty well. And we know there's some. We're spread out between newer traders, experienced traders. We have some traders in there teaching courses, some traders in there doing money management. So it's all over the board. Next week, we're going to get a lot of rookie traders in. So there's going to be a lot of questions. So if you're looking for a time to really get some education, next week is the time you want to be, or actually for the whole month, I would say. The whole month is when you want to be in the room. But usually the first week, we knock out a lot of those basic questions. So I'll see you next week, and good luck this weekend.